This industrial stock just beat earnings estimates by 81%, and almost nobody on Wall Street is paying attention. Let's break down global industrial company, ticker GIC, on the New York Stock Exchange. GIC shares trade around $39, near their 52-week high, giving the company a market cap near $1.5 billion, a trailing price-to-earnings ratio around 17 times, and a dividend yield near 2.9%. The stock has ranged between about $26 and $40 over the past year. Second quarter 2026 net sales were $386.6 million, up 7.7% year over year, and ahead of estimates. Operating income jumped 47%, with operating margin expanding to nearly 13%. Reported diluted earnings per share came in at 96 cents, crushing the 53-cent consensus estimate by 81%. Here's the catch. That beat was inflated by a one-time $26.2 million government tariff refund. Strip that out, and adjusted earnings per share was actually 54 cents, a decline from 65 cents a year ago. Adjusted gross margin also fell, pressured by freight costs and a mix shift toward larger, lower-margin orders. Wall Street's own full-year consensus expects earnings per share to decline roughly 5% this year, even as revenue keeps growing. The balance sheet is clean, $86.7 million in cash, minimal debt, and a nearly $120 million undrawn credit facility. Buybacks were modest, at $4.7 million for the quarter. Global Industrial distributes industrial and maintenance products across North America, competing directly with much larger rivals like Grainger, Fastenal, and Amazon Business. New CEO Anissa Chaibi, the first leader from outside the founding Leeds family, took over in early 2025 and has overseen 3 straight quarters of accelerating sales growth, backed by growing e-procurement adoption and a sales force reorganization around customer verticals. Here's the part that matters most. Only 1 or 2 analysts even cover this stock. There is no statistically meaningful consensus price target, and the one analyst who does cover it, from William Blair, reiterated a hold rating the day after earnings. So is this a genuinely accelerating industrial distributor trading near its highs on real momentum? Or a headline earnings beat propped up by a refund check that won't repeat in a stock almost nobody is watching closely? Not financial advice.